If you're looking to diversify your portfolio beyond North America, but also want to try to avoid trade risk, you may want to consider a class of companies in Europe and Asia. Joining us now to discuss, Michael Brown, VP Director and Portfolio Manager with TD Asset Management. Great to have you back on the program.
Yeah, thank you for having me, Greg.
This is such an intriguing topic as people have wondered about the American markets. They've wondered about trade and tariffs, and the headlines changing on that every day. Take us into Europe and these companies that we might want to be thinking about. I think there's a domestic.
So looking at, in terms of performance of European companies, many are export dependent. The ever-changing tariff narrative has basically created an overhang on those companies. So we're really looking at companies with domestic drivers, or Eurocentric as some are called. So like these would be old-fashioned names like utilities, dealing with infrastructure spending in Europe, especially as Europe as a continent and they focus inward as opposed to outward towards the US for growth. There's been some positives in terms of fiscal stimulus. There has been also some investment growth plans. I mean, also amongst domestic growers would be, of course, the European banks. They've really been performing well since the end of negative interest rates and the post COVID recovery. They've continued done well as interest rates, albeit they've cut rates, they're still higher than they were expected a number of years ago, increasing the profitability. Credit growth continues to be positive in Europe, and credit losses are also benign. So it's been a positive place to be for a number of years. Other areas where we've talked about would be aerospace defense. Once again, Europeans, as long as Canadians, are increasing their defense spending. Many of these European focused defense suppliers have also done quite well and been attractive. And then on top of that, you have some spillover effect in terms of companies benefiting from the infrastructure spend, as well as like construction materials, building products, names like Saint-Gobain, which is a leader in housing materials, or Heidelberg, which is a leader in supplying cement to Europe. As you can probably guess, you don't ship cement across borders, it's done locally. So
I find this such a fascinating theme because I think obviously there's been some moves in the market already, so the market is aware of these opportunities, but I feel like I never see headlines about this opportunity.
Yeah, it really is. I mean, looking at some of the economic indicators, like in no uncertain terms, growth in Europe is not high, but it's steady, and it's more the incremental positive news of a new construction plan, a new, even simply like European telecoms, which have underperformed for 20 years. They're reducing their CapEx plans. They're being allowed to increase pricing to make them more competitive. That is a sector that's woken up in the last year that, well, many had forgotten it existed.
So there it is. German stimulus. Let's start going through some of the countries. Obviously, Germany has been a powerhouse of Europe, and there's been concerns about it. Now they're stimulating. Well, what does that mean for sectors and different benefits?
Yeah, in terms of Germany, a lot of their growth was, as you can guess, tied to the autos industry. And the autos industry, particularly the German autos, they had levered most of their growth trajectory on China. So that has been somewhat challenging. So what has passed is a 500 billion euro stimulus plan, which is really a departure from what we've seen in terms of fiscal stimulus in Germany for the last decade at least. And that has basically helped gradually increase the GDP outlook for Germany relative to other countries in Europe. And also, Germany would not be the only beneficiary. There'll also be spillover effect to Italy, France, Spain, and other European countries. They are more fiscally challenged, so Germany does have the room to do stimulus. Where we're seeing significant benefits to this, like once again, would be names like Heidelberg Materials or Siemens, the industrial complex within Germany, as well as defense spending. But really, infrastructure, green initiatives, all these, there's multiple drivers there that are positive. And once again, it's the incremental improvement in outlook as opposed to gigantic growth swings.
Fascinating stuff there in Europe and Germany. Not just about Europe, though. Japan, what's happening there when we talk about domestic focus?
Japan, where an area that we do like is the infrastructure building. So names like you would look at that would be like construction engineering names. I mean, even the old regional Japan railways, there's 4 of them that came out of the government several decades ago. Passenger rail but they're also significant landowners. So development of those lands, revitalization, I mean, Tokyo, Japan is very attractive as a tourist destination. There's increased number of expats living there. They are growing. So this is a boom in construction and real estate there. One of the leading ways to play it would be the construction engineering companies, which are all almost 100% Japan. Names like Kojima or Tase, there's a few of them there, so.
Yeah, fascinating stuff on that front too. When I think about the tensions, when we get back to the geopolitical trade tensions between the United States and China, it's just not about the two of them and things crossing the Pacific. Sometimes countries get caught in the middle of that. How should we be thinking about that?
The exports from China to the U.S. gets the headlines. It's been quite an interesting story in terms of, so they publish monthly export volume data. And as of the end of May, the exports from China to the U.S. were down 35% year over year. However, these exports from the U.S. to China, say 20 years ago, would have been 30% of their exports. Now it's less than 15. So they're much less dependent on direct exports to the U.S. However, over that same time period, like over the year-over-year growth, their global exports from China have actually remained flat, which in the midst of a trade war would not be something you would expect. That is positive. I mean, there's been significant growth in exports to Europe, UK, which is positive. But the biggest growth has come in the ASEAN region. So what has been interesting with the Vietnam trade deal that's been negotiated, I'm not sure if it's finalized, but over the last few weeks, was the concern around transshipments. So essentially, indirect exports from China going through ASEAN countries into the US. Now, China's exports are now 30% going to ASEAN countries. Explosive growth over the last 20 years, more recently as well. So that becomes an area of focus where it does bear watching to see how many of these would be impacted by the tariffs from south of the border. So.